How many branches does your favorite bank have? And in those branches, how many loans are they able to do every single day of the week? Now, loans are assets to the bank. And so with multiple branches, multiple loans, that's how the banks make lots of money. What's up, everybody? It's Jadu and Jonah of the Banking Bros here at the Cash Compound, and we are talking about banks this week. Sometimes we're not talking about banks, but like conventional banks, but we say the word bank a lot.
Yeah, we sure do. So we'll relate to conventional banks today.
Okay,
we'll talk a little bit about conventional banks and, of course, how that relates to your banking policy.
Yes, right. So prior to understanding having your own banking system, your own banking policy, what are some of your favorite banks? Do you have favorite superheroes and favorite movies? You have favorite banks?
Yeah, I got a favorite superhero. I'm not sure I have a favorite bank. I was using USAA. I like USAA.
Right.
They make it easy. I know these days a lot of people use those online banks.
Now, I had an online bank when I was finishing up college, and it gave a pretty healthy, compared to now, interest rate, and it got sold off. But it was awesome at the time.
Yeah, a lot of people are using, I'm going to forget the names, Chime. Chime is an online one now.
I believe so.
Capital One. Oh, no, they have... Capital One's getting stores now. They used to be online.
Capital One's the one who bought the bank that I loved so much back in the day.
Yep. And I can't think of the others. There's a few others that are all online based now. People like them because they don't do a lot of the fees and stuff. Make it easy for you.
Right. Of course. We're getting all these transactions via our phone, and banks are wising up because they have to go with the market and the people and somewhat of the decentralization of at least that part of the banking system. So here's my question for you as we start off. First, Jonah, let's get into our word of the week. And let me ask you...
It's time for our word of the week.
All right, here it is. So let me see if you can do well. I've pulled up Wikipedia. Okay. I want you to define bank according to Wikipedia's definition. What you got?
Stink.
Just come up with something.
It's just bank. The word is bank. All right. So my made-up definition here, close as I can get, is an institution, a financial institution.
Oh, we going all categories out here.
That houses... money. That's what I got.
All right. A bank is a financial institution where customers, you did say some of those words. I know some of those words.
Yeah, for sure.
A financial institution where customers can save or borrow money.
Yep.
Yeah, okay, but there's a couple more. You extend the definition to this. Banks also invest money to build up their reserve of money. Banks also can use the money they have from deposit accounts to invest in businesses in order to make more money.
Right off Wikipedia, huh?
Yeah, that's just Wikipedia right here.
Interesting. I like that. We talk about that a lot. Sometimes people come to this realization they don't realize that. So I want to read one more time the last sentence of that where it talks about loan and money.
Banks also can use the money they have from deposit accounts to invest in businesses in order to make more money.
Man, that's powerful.
So powerful because as I'm reading this, I'm like, man, I think too much. We got the heliocentric theory or whatever, does the world revolve around the sun or the moon or the earth or whatever? I think we think things revolve around us, but right here in the definition, I'm reading that banks are in the business to make their own money.
Sure are.
Yeah.
So one of the things that we talk about a lot is we kind of relate banking policies, which we're going to get to in a second here, to the conventional bank, right?
Right.
And we say things like, how much money would a conventional everyday down the street bank make if when you deposited your dollars into that, they put it in the back and locked it in the safe?
Right.
And the answer is none. Per the definition via Wikipedia, they're allowed to lend out the money that depositors put there.
And if they don't, they're not in business.
If they don't make any money.
Right.
If they do, they make plenty of money. And like our episode title is today, so if they are allowed to lend out the money that depositors put there, how many branches of that? You think it's only going to be in your town? One building, one institution where people deposit money?
Right.
No chance. Right? 5 in your town, and in the town over, another 5, and in the town over from there, another 5, right? Because they have to get the money from the depositors to be able to lend it out to make more.
Love it.
Right.
So how does this relate to the banking policies we talk about then?
Absolutely. So when we have a banking policy, we teach you that the way that you can make more money inside the banking policy is by practicing loans. And again, we're just copying the example that these conventional banks have given to us every single day of the week, right?
Yeah.
And so what we're saying to you, asking you, posing the question to you is, how many branches does your favorite bank have?
Thousands.
Why do they have that many? Because it allows them to do more loans, right? And since they have that many and it allows them to do loans, for you and your banking policy, shouldn't you have more than one branch? More branches means more loans means more money.
Right. That's right. So now let's get kind of to the brass tacks and help people understand what that means. Most of the time when you're out there ready to get started with your own banking system, which we talk about as a policy contract from a mutual company using whole life insurance, you're thinking about life insurance a little bit too much, and you're thinking about them to the detriment of the banking functions.
I agree.
Okay, so that means most people, would you agree, they're thinking about having one of these, not thinking about multiple.
I agree. Yep.
Okay, so that's fine. We're going to start there. But see, you can have life insurance connected to multiple people that you can own. You can have multiple. So remember, if we're talking about this from the infinite banking concept perspective, we're not talking about life insurance specifically. We're just using that product for the concept.
That's right.
So banking needs multiple branches, needs as many loans as possible, needs all sorts of great systems for money to keep flowing. You got to crack the code to cash flow.
Yeah.
Flow.
Flowing money.
Yeah.
Now, when we talk about loans, I think it's remiss if we don't make sure you understand how a loan makes the bank money. You've got to understand that, right?
All right. Go ahead then.
And so here's I'm going to pose some questions to you. I want you to answer the questions.
I'm going to get them right.
Okay, no worries. So we know that the bank has money from depositors. We're on the same page about that?
Yes.
The bank's got money from depositors. Okay. And so if you go into the bank and you're ready to purchase a brand new F-150, you like trucks, right?
I do not.
Okay. So maybe you want a brand new I don't know what you like. What about a Chrysler 300?
Yes, there we go.
Okay, Chrysler 300.
Counterclockwise spinners. Holla at your boy.
All right, so you need $50,000 for your brand new car. You walk into the bank to get a car loan, so you can go get the car. Whose money did the bank give you?
They gave me depositors' money.
Per the definition on Wikipedia.
Per the definition.
Okay, just making sure. They gave you depositors' money. And then, so that's step one. This is an important step. Step one, loan out someone else's money. Then step two, this is really important. They're going to make you sign some papers to get out of that bank.
For sure.
Are we on the same page?
Of course. It's a loan. I'm borrowing money. They want me to pay them back.
Okay, and here's my summary of the papers.
Okay.
Where I know that you're about to borrow $50,000 from us for your Chrysler 300, but you have to pay us back, and you have to pay us back with interest. How's my summary?
That's what the papers say, I guess. Yeah.
Okay.
Very much
and
so.
Whether you pay them back early or on time or late, do you still give them more than $50,000 with interest?
Yes, that's the premium I pay to get money from someone else now. Okay. I get that.
And what if they charge you 5%, or maybe the next person for the same Chrysler 300, they charge 10%? Does it really matter? Or do you have to give the bank back all $50,000 plus more, plus interest?
Of course. I'm going to give them back all the money that I took plus more.
All right, now let me stop. This is important.
Okay.
The bank loans you money for the Chrysler 300. Does that action make the bank any money? They loan you. You walk in, you say, I want the car. They give you the $50,000. You can go get the car. Does the bank make money off that step?
No.
The bank makes money off the step where you pay the bank back plus interest, right?
Yes.
Because if you pay the bank back plus interest, that means you gave them more than $55,000. So let's say they get, or $50,000, I'm sorry. So let's say they get $55,000. You gave them $5,000 extra dollars. It's pretty simple.
Got it.
The bank just made money. Would you agree?
Yes.
It was the payback step where they made the money.
Yes.
Okay, cool. Here's what I think a lot of people miss. They also got the original $50,000 principal back.
Yeah. I paid them more than I got. I gave them everything back.
It's not you just gave them $5,000. You have to give them $55,000.
Yeah.
So the same $50 they gave you for your Chrysler 300 is the same $50 they gave me for my Ford F-150. How crazy is that? Does that make sense?
I got you. So the money is coming out of my pocket back to the bank, but the bank can reloan it.
Exactly.
Yes.
And so what I'm saying, trying to paint the picture of every loan that the bank gives out is an asset to the bank. Every single loan, it's the payback step that makes the bank money. And so when we say loans are assets to the bank, it's not loan and no one has to do anything about the loan. It's loan and you will pay us back, and we know that's going to make us money every time. Mm-hmm. And so when we're telling you to do loans, it's not use this money, spend the money, go have fun with it. That's going to do anything for you. It's when you loan the money, you also pay it back. That's the step that makes you money. The more times you can do that over and over, the more money you make.
Got it.
Does that make sense?
Cash flow.
Cash flow.
Cash flow will grow, but if cash sits still, it will not. It ain't no chill.
Okay, we'll take it.
Yeah. So we hope you guys understand that. So you can participate in this on a multiple branch level. It's kind of like the first bank that you start is the headquarters, but then you have branches that go out in other places and spaces in your world. And in your world, that's going to include family members.
Yep.
That's going to include business associates, key employees for your business, parents, children. You can own and control banking systems that are connected to the lives around you.
Absolutely.
So, Jonah, here's the question.
Okay.
When did you start a policy? Who was it on? And give us today's update on that. Do you have more than one policy?
I do have more than one policy. I have some policies that I own on my children. I have a 3-year-old little boy. He's about to turn 4. Just had a birthday party for him. It was a good time. And
I was wondering, we had the birthday. He's not 4. Oh, no, his birthday's coming up.
His birthday's coming up, but we're going to be out of town.
I hope he doesn't listen to this
party early. And then I have a 1-year-old little girl. They both have policies on them, meaning they're the insured person.
Okay, who owns it?
They're 4 and 1, so I own them. I use them. Those policies are 4 years old and 1 years old. Surprise, because they're 4 and 1, right? Does that make sense?
Yes.
I own them. I use them for banking, but I use their bodies as the insured.
So you're allowed to have them on your kids?
Absolutely. Absolutely. Multiple branches for my family bank, and I'm not actually the insured person.
All right. What about the missus?
Yeah, we've got 1 or 2 on the missus as well. Again, I normally manage the funds in our family, so I own and control. I mean, she can own and control as well, but it's just not really her area. Own and control, and multiple branches for our family, but it's not actually on my body. It's on the missus.
Okay, so what happens though if you die though and you own it?
Sure. If I die and I own the policy is going to continue. The insured person still around. So the policy's still around. And so at that juncture, we need to make sure that we have someone else to pick up the slack and keep it going, knows what they're doing, right? Which, of course, in my family would be the wife.
Okay. And what about the beneficiaries? So hold on. You got a policy on the missus, you own it. So who's supposed to get this money?
Well, if it's on so I'll get the money. I'll be the beneficiary. Sorry, I don't know if it's a trick question. So the policies that I own on the kids, I've got that money just in case something happens to the kids coming back to me, because obviously I'll still be around. On the policy for the missus, I got that money coming to me. On the policy for myself, that money's going to the wife. Right?
Yep.
Just got to mix and match it. Whoever's going to still be around. Something happens to me, wife needs the money. Something happens to the wife, I need the money. Something happens to the kids, we get the money.
All right. So if you are grown and your kids are grown, okay, there's lots of people out there who have grown children. Your kids will grow up eventually and be a little older than 4.
Yep.
Okay. So who's going to be the beneficiaries on your policies?
On my policies?
Yeah.
Well, it would probably still be the spouse, but just in case I need to change it, I can just change it over to the kids.
So you can change it?
Yeah, I can change it. Absolutely.
Okay.
And if the kids get married and all that, when they're really old, I can change the beneficiary to their spouse, to their kids. We can split it 50-50. 75-25, whatever's going on.
Okay, so what about if they get married, do we change the insured body to their spouse?
Good question. So the insured body actually can't change. That one's not changing for the lifetime of the policy. The ownership can change, who manages, controls, uses the money can change, the beneficiary can change, but the insured person, the person who the policy the life is based on, that actually can't change.
Got
not changing that.
Okay. Well, I think we've got a better understanding of the multiple branch idea. See, the infinite banking concept was originated by Nelson Nash. Get his book, read it. He had over 40 policies.
Sure did.
40 policies at his peak. He passed a few years ago and started to, like Jonah said, give those policies off to the family members, to the people who could continue the legacy, the family bank, when he had no need of them anymore, or he had started them on his kids or grandkids, and when they came of age, he let them take over the policies. So we've got more and more dollars that we want to get inside the family bank system, but a contract is a contract. So once we start it for a certain amount and we make bank next year, figuratively, we need a new policy to get those dollars inside of, because it won't fit. All of the money we ever want to put in that policy that we have will not fit in the original policy. So we get more branches. Does that make sense, everybody?
Got it. And if you're interested in starting your 5th branch, 10th branch, or even your first one, make sure you reach out. The link should be in our bio if you're watching on YouTube, or in the description if you're watching on YouTube. If you're watching on Facebook, it's in above you. If you're seeing us on social media, the link's in the bio. We want to talk to you. We want you to get on our calendar. Let's answer your questions. So we appreciate you hanging out with us. That's our podcast episode on having multiple branches, and we'll see you guys next time.